Stripe and Advent International just made a $53 billion offer to buy PayPal. That's $60.50 per share, a 28% premium over its last price. This is the biggest payments M&A in history, and it changes everything about the future of money. PayPal is a household name, over 400 million active accounts, processing trillions in payments. But its stock has been lagging. Stripe, the private giant valued at over $50 billion, sees an opportunity to merge the two payment empires. Advent International is no small player. They manage over $100 billion in private equity. By teaming up with Stripe, they're betting that combining Stripe's developer-first platform with PayPal's massive user base will dominate global payments. But this isn't just about payments. Stripe has been diving deep into crypto. They were early supporters of stablecoins and the OpenUSD consortium. Merging with PayPal brings crypto-native infrastructure to hundreds of millions of users. PayPal already lets users buy, sell, and hold crypto. With Stripe's technology, they could accelerate stablecoin adoption, lower transaction costs, and bring instant settlement to merchants worldwide. That's a direct threat to traditional banks. The offer values PayPal at $53 billion, a 28% premium. That's a huge vote of confidence. But it also puts pressure on competitors like Block, Adyen, and even traditional processors like Visa and MasterCard to respond. Meanwhile, the DTCC, the Depository Trust and Clearing Corporation, just announced a massive breakthrough. They're tokenizing real stocks for the first time, with JP Morgan, Goldman Sachs, BlackRock, and Vanguard all participating. JP Morgan tokenized a portion of its Invesco QQQ Trust holdings held at DTCC, and they can convert them back to traditional shares anytime. This is the first time legacy infrastructure has moved real equities onto a blockchain. Goldman Sachs, BlackRock, Vanguard, and the New York Stock Exchange are all in. Plus crypto-native firms like Circle and Kraken. This consortium of nearly 40 institutions is building a tokenized market that could reshape finance. This puts direct pressure on crypto-native firms like Ondo and Securitize, which had been moving faster than legacy infrastructure. Now the incumbents are catching up, and they have trillions in assets under management. Tokenization means you can trade stocks 24/7, settle instantly, and even use them as collateral in DeFi protocols. The DTCC move validates blockchain as the backbone of capital markets, not just for crypto, but for everything. And it's not just stocks. The same consortium is working on tokenizing U.S. treasuries. That's a $28 trillion market. Imagine government bonds that settle in seconds, programmable, and accessible globally. Morgan Stanley's E-Trade just launched direct crypto trading for Bitcoin, Ether, and Solana. They're using infrastructure from Zero Hash. This lets millions of existing brokerage customers buy crypto without leaving their account. That's a direct competitive threat to Coinbase and Robinhood. E-Trade has over 5 million accounts. If even a fraction start trading crypto, it could siphon billions in volume from the crypto-native exchanges. Speaking of Robinhood, they just launched their own Robinhood chain for crypto trading. They're trying to build an integrated ecosystem, stock trading, crypto, and now their own blockchain. The competition is heating up fast. Meta is also making moves. They rolled out digital dollar payouts for global creators. That means millions of content creators on Facebook and Instagram can now receive stablecoin payments directly. This is part of a broader trend. Stablecoins are becoming the default payment rail for the internet. The OpenUSD consortium, backed by BlackRock, Coinbase, MasterCard, Stripe, and Visa, now has over 140 members. The OpenUSD model distributes reserve yields to participating partners rather than a single issuer. That's a decentralized approach to stablecoins that could challenge Tether and USDC. Back to the PayPal deal, regulatory scrutiny is almost certain. A combined Stripe-PayPal would control a massive share of online payments. But with the new administration's pro-crypto stance, approval might be smoother than expected. For crypto, this is huge. Stripe has been building crypto infrastructure for years. They were early with Bitcoin payments, then stablecoins. Now they'll have PayPal's regulatory licenses and banking relationships. Imagine a world where every PayPal merchant can accept stablecoins instantly, with near zero fees. That's the vision. And with DTCC tokenizing stocks, you could pay for a coffee with a tokenized share of Apple. Coinbase and Robinhood stocks rallied today as crypto stocks led broad market gains. Investors are betting that institutional adoption will drive volume. But the real story is the infrastructure battle beneath the surface. Goldman Sachs also reported earnings today, beating expectations with a 9% pop. Big banks are embracing digital assets while also competing with them. It's a fascinating tension. The bottom line, the lines between traditional finance and crypto are blurring fast. The PayPal bid, DTCC tokenization, E-Trade crypto, Meta stablecoins, they're all pointing to one future. That future is tokenized, instant, and global. Whether you're a trader, a creator, or just someone sending money to family, these changes will affect you. And they're happening right now. We'll be tracking every development, the PayPal deal, DTCC tokenization, and the ripple effects across markets. Make sure to subscribe so you don't miss the next big move. Thanks for watching. If you found this valuable, hit like and share it with someone who needs to understand where finance is headed. See you in the next video.